Hi and welcome to this live currency strength indicator tables video. My name is John. I'll be taking you through the charts this Monday, the 14th of November. Here you can see in front of you, you have the live currency strength indicator tables. We have two types of tables. We have the trend traders and the day traders table. These are showing the same studies but just highlighting different time frames. You can see that some of the currencies are highlighted in green. That's showing us that there is a confluence between those two trading time frames, and that's where we'll be focusing our attention in these videos. The tables auto update every 15 minutes 24/7, so wherever you are in the world you can access charlesclifton.co.uk and get the latest strength indicator table update. So what's the table showing us today? Well, it's showing us on the trend traders that the New Zealand dollar still remains as S1, the strongest currency. That's then followed by the Swiss franc, which is the second strongest currency, followed by the third strongest currency, which is the Japanese yen. On the weak side of the trend traders table, we have the US dollar. That's then followed by the second weakest currency, which is the Canadian dollar, and the third weakest currency is the pound. On the day traders, you've got the Swiss franc as the strongest currency, followed by the Japanese yen, followed by the Australian dollar in S3. On the weak side of the day traders, we have dollar as W1 again, followed by CAD as W2 yet again, followed by the New Zealand dollar. Now you can see here the New Zealand dollar has appeared twice on the tables, but it's not highlighted in green. That's because they're on the opposite side of the tables to each other, so the higher and the lower time frame are currently not in agreement, which is not something we want to be focusing on. So, currency pairs that we could be looking at today, you've got the dollar Swiss, you've got the dollar yen for some downside. There's potential downside on CAD Swiss as well as CAD yen, so something to consider there. We're going to take a look at dollar Swiss. That's actually tops our day traders, and we're going to have a little look at the bigger picture outlook as well as some other narratives. So let's jump into that chart. You can see here I'm on dollar Swiss. I'm on that monthly time frame, and you can see that price is actually trading within a long-term range. Ever since the sort of 2013, price has been trading between the 0.88 handle, parity, and just above parity at the 10.250 handle. So price has been trading within this area for some time now, and most recently we came up into the parity level and rejected. Now that was largely due to last week we had the US CPI data, which came in lower than forecasted. What happened then was the investors essentially assumed now that the Federal Reserve are not going to hike rates aggressively in the next meeting. In fact, we'll probably start to see the Federal Reserve slow down the pace of tightening now. So that has seen the US dollar move to the downside. Combo that with the Swiss franc strength, and we've got price then falling within this range. Now, if price is going to follow the plan of the range, we could expect a move to continue to the downside here towards the 0.88 handle once again. And if price then finds support at the range lows, we could see a move back up to parity, even the 10.250 handle. So if we're going to potentially move down towards this area, what could we be looking at? Well, I'm going to go into the weekly time frame and just show you what the narrative is here, and you can see that actually within the overall range, price was in a little bit of a bullish channel. So price was making those higher low patterns, really hugged the bottom of the bullish channel trend line before springing back up into the key area. We then bounced from the trend line support and the horizontal support at 0.94, and price bounced back up to the trend line highs as well as that parity key level. Since then we've driven down. We've actually broken out of the bullish channel in here, and we're trading below it at the moment. However, we are still trading above the 0.94 handle. So personally, if I was going to get short on this for the long term, I'd want to see potentially price trade below the 0.94 handle to confirm that sellers were really going to drive price towards the 0.88 handle again. However, we could look for some short-term opportunities, considering that on the tables we are on its top in the day traders. That means it could give us an opportunity on the short term. So if I just pop down to the daily, I can reveal a couple more levels. So again, within that sort of bullish channel, we have another move where price was trading within a channel. We kind of got supported towards the highs of the channel before seeing another move which broke through the 200 moving average as well, and broke through some key lows like the 98.50 handle. Now if I actually go down again, you can see there's one level of interest for us that's really going to potentially come in for us. So the one thing that I'll be looking for from a day trader's point of view is where I can add confluences into the market. And you can see here I have a trend line formed from this recent downward move. That trend line comes into contact with a horizontal resistance area, which is this 0.9625 handle, and that's driven by this support through here, as well as this most recent pause in the market on the way down. So the way I'd be looking at this from a day trader's point of view is I have a trend line resistance, horizontal resistance, and I also have the 200 moving average resistance through here. So you can see 200 MA running through here at 0.9628. So three confluences are building up around this area here, around the 0.9625 handle. So what I would be expecting is if price came up into this area here, we had a rejection from all those different confluences, that would give me the option to look for price to push back down initially to the most recent swing lows at the 0.94 handle. If we trade through that, then we can look at other options to consider moving to the downside there. So just something to consider there on dollar Swiss, as the market and the currency strength indicator tables are suggesting that dollar Swiss on the day traders could continue to push to the downside. Alternatively, you could look for the breakout option. You know, if price just consolidates here, breaks out of the 0.94 handle, that could also be something you want to look into, as the momentum could be pushing price lower. I just think from personal experience, seeing this large weekly candlestick, I mean the range of that candlestick was 580 pips. Now if I look left, there's not many candles that represent a 580 pip move, so quite often we will see a slight recovery before a continuation. Now that recovery, like I said, could bring us into the 0.9625 handle, so that's what I'm going to be looking for on dollar Swiss. I'm going to leave it there. I hope you enjoyed this video update. If you did, then please head over to charlesclifton.co.uk. Here you can access a £1 trial to see if the currency tables are something that you want to add into your trading toolbox. Thanks for watching this video update, and I look forward to speaking to you soon.